Welcome to Accounting Classroom. In today's lecture, we'll learn about Economic Order Quantity, or EOQ, one of the most useful tools for controlling material cost. By the end of this class, you'll know what EOQ means, how to calculate it, and why it's important for every business. Economic order quantity means the optimum quantity of materials a company should order each time to minimize the total cost of ordering and holding inventory. In simple terms, EOQ tells you the best quantity to buy, not too much, not too little. There are two main costs that EOQ tries to balance. Ordering cost, the cost of placing and receiving an order. Examples: transportation, clerical work, and inspection. 2. Carrying or holding cost, the cost of keeping inventory in store. Examples: rent, insurance, interest, storage, and spoilage. If you order frequently, ordering cost goes up, but holding cost goes down. If you order in large quantities, the opposite happens. Ordering cost reduces, but holding cost increases. EOQ finds the point where both costs are at their lowest combined total. The standard formula for EOQ is EOQ equals the square root of 2 times D times C over H, where D equals annual demand in units, C equals cost per order, H equals annual holding or carrying cost per unit. So, EOQ helps to identify the most economical quantity that minimizes total inventory cost. Let's work through an example. Full-Site Manufacturing Limited uses 12,000 units of raw material per year. The cost of placing one order is $600, and the cost of holding one unit in stock for a year is $3. Find the economic order quantity. Using the formula stated earlier, the economic order quantity is 2,190 units per order. This means the company should place orders of 2,190 units each time to minimize total cost. We can also find the number of orders to be placed in a year using number of orders equals D divided by EOQ. That is, 12,000 divided by 2,190 equals 5.48, equals 6 orders per year. So Full-Site Manufacturing should place about 6 orders per year, each for 2,190 units. We can also estimate the total cost at EOQ using this formula. Total cost equals open bracket D divided by Q multiplied by C close bracket plus open bracket Q divided by 2 multiplied by H close bracket. That is, the total cost equals ordering cost plus holding cost, where D stands for annual demand, Q is the order quantity, C is the cost per order, and H is the annual holding cost per unit. Doing that, we get 6,573 approximately. That is the minimum combined ordering and holding cost. EOQ offers many advantages. It reduces total inventory cost, avoids stockouts and overstocking, improves cash flow and working capital management, makes ordering more systematic. EOQ is based on some assumptions. Demand is constant and known. Order cost and holding cost remain constant. Lead time, delivery time, is fixed. Materials are available whenever required. In summary, EOQ helps determine the most economical order quantity that minimizes total inventory cost. It is the bridge between cost control and smart purchasing. Mastering it gives any business a clear financial advantage. If this lecture helped you, please don't forget to kindly like, subscribe, and share.